Hey guys, it's Ariana Bibieska. If you're new here, welcome. I talk all about stocks, real estate, and just entrepreneurship in general. In today's video, we're going to be talking about how to know when to buy or sell a stock. Before I get into it though, let me go ahead and promote all my socials. I also have my website linked down below where you guys can schedule one-on-one Zoom meetings with me. I will also include a free Zoom meeting that you guys can watch before you decide to purchase any of the meeting plans. But yeah, that's it for the intro. Let's get right into it. So the way that I choose my companies to invest in is by going through a set of tests. And this is usually how I set up the Zoom meetings if you've ever had a Zoom meeting with me. The first thing we do on the very first day is we go through the list of the S&P 500. From that list, we pick any companies we've heard of or that we enjoy buying from. And then we create something that's called a watch list. To create your watch list, you can use the Stocks app on your iPhone, which is what I use, or you can use apps like Benziga and Yahoo Finance. Before investing in the company though, I'm already thinking about how long I'll be keeping my stocks for, or the date that I'm thinking about selling them. In my particular situation, I'm using my stocks as a way to save up for a down payment on an investment property. I'm not going to be selling my stocks until I'm ready to purchase that property, and I started investing in September of 2020. So I don't plan to sell them until I would say September-ish, like towards the end of 2022. The most common reasons why people save up through stocks is for college tuition, their kids' college tuition, a business, retirement. So make sure you have a set plan before ever buying the stock. So let's get into those tests. There are 5 tests total that I go through to choose the perfect stock. And this perfect stock must pass all the tests. The first test is to check your 1-year chart. That 1-year chart must have 30 to 50% return within 1 year. For instance, we can look at Crocs right here. The 1-year chart shows over 90% return in just 1 year. This basically just proves that the company is growing. The other important test that can kind of be added on to that first test is to make sure that the rest of the charts after the 1-year chart have continued to grow. So now we're talking about the 2-year, the 5-year, the 10-year charts. All of these will prove to you that the stock was not just growing on this 1 year. It's something that has been going on throughout many years and has stayed consistent throughout those years. For that, we can take a look at how Apple has been doing. Amazon is also a really good example. The 1-year chart is not that strong, but throughout the other years, 2-year to 10-year, it has had great returns. Now, I personally wouldn't invest in Amazon just because it is way too expensive, and for that price a share, I would rather put it into something cheaper that would give me a larger return on my investment. So if we see Apple's chart and then Amazon's chart as a comparison, the 2-year chart for Apple shows us that there's 117% return, and the 2-year chart for Amazon is only at 70% return. So that is what I mean by you get a higher return on your investment, especially because Amazon is like $3,000 while Apple is less than $200 with higher percentage returns. The third test that you want to go through, that is probably the most important test out of all, is to check the drops. So this is where you want to refer back to that 1-year chart again and point out any peaks that you see on the chart. So any point on the chart where there's a sudden rise and then a drop. If you are in the Stocks app, you want to put your left finger and then your right finger on the high. So your left finger is going to go on the highest point and your right finger is going to go on the lowest point. And you just want to see how much that drop has dropped by, basically. So the reason why we're checking this is because we want to see how aggressive the stock is. We want to see on average how big are these drops. If this stock normally has extremely large drops, like $40 drops, $60 drops, anywhere between that number, doesn't have to be specifically 40 or 60 or whatever, but it's just like big number drops, that is a more aggressive stock. If this is a stock that maybe drops $5 on average or $20 on average, that is a more consistent stock. So for example, let's take a look at Bank of America. For Bank of America, if you go to the 1-year chart and you see those high points, you can see that Bank of America has dropped about $5 since the high point and the low point. So that is a more consistent stock. It's not going to really drop. Whereas Tesla, on the contrary, we can see some of the drops can go anywhere from $200 to $300 $300 down. And if you go to the 2-year chart, you can see that in more detail. That is usually what has been repeated throughout the chart. The 4th step, now this is honestly optional. I would only do this step if we are dealing with an aggressive stock, because now what you want to do is you want to go on to Yahoo Finance and do a chart analysis in more detail to plan out where you're gonna buy, or if it is a good time to buy right now, you know, because if you are interested in a stock that is aggressive, that has those big drops, you don't want to buy at the high point, because then, you know, it's gonna drop, and it's gonna drop heavy. That's what aggressive stocks do. They drop heavy. So you want to buy at the heavy drop, not before the heavy drop. So let's go to the computer. All right, so I'm gonna just quickly do a quick analysis. So this is what it looks like at first on Yahoo Finance. And I'm going to be looking at the ticker Microsoft. So the first step is you want to go into here where it says date range, and you want to change it to the 1-year chart. You want to change the interval to the 1 day, and for the line you want to change it to a candlestick graph. Okay, so that's all we did right now. We changed 1 year, 1 day, and the candlestick graph. After this, you want to add your indicators. So you want to go here where it says indicators, and I like to keep it simple, just put moving average and RSI. The RSI basically just tells us if the stock is overbought or oversold. In other words, if it's at the all-time high or if it's at the lowest, not at a bad time to buy. And the moving average is basically just the average price that the stock is at, taking into account the highest point and the lowest point. And I like to use the moving average to identify that real drops on the stock. What I mean by this is, take for instance this set of red candlesticks right here. So I'm gonna, what I did right now is I clicked draw. I went over here where it says line, doodle. I'm just gonna quickly show you guys a little thing right here. So see this right here? Some people might say this is a drop, but obviously the real drop is not here. The real drop is right here because it goes below the moving average. But I like to use it as a guide to really know what is the actual drop that we're identifying here. So later on, our calculations won't be wrong. So in a bit, you'll understand what I mean by this. But stocks go through these little choppy points just for resistance. You know, a stock can't just go in a straight line up. It's gonna have these little points. But we have to know the difference between this resistance and then an actual drop. Otherwise, we're gonna be doing our entire analysis wrong. All right. First thing I'm gonna do is identify those drops. And by doing this, I'm just gonna, super simple, circle anywhere I see that there's a drop. Anywhere I see that there's a drop. So right off the bat, me, because I already have experience with this, I can already tell it's at a good time to buy. But now let's see why it is at a good time to buy. First thing we're gonna do is we're gonna go through every single circle, and we're gonna get the highest point and subtract it by the lowest point. Okay, let's go here first. Right here it shows highest point 304, lowest point 281. So 304 minus 281, that's $23. So $23 down, and I just do this so I can remember. And then here we have highest point 261, lowest point, it looks like 243. So we're gonna go 261 minus 243, and that's an $18 drop. Right here we see 244 all the way down to 226, and that's an $18 drop again. And then up here we're gonna say that's like 344 all the way down to 307. 344 minus 307, so it's like a $37 drop. The reason why we highlighted every single drop is because we want to notice a pattern. And here in Microsoft, I already noticed a pattern. Typical range that these drops go through is $20 to $40. We're gonna go again to draw over here, text range of drops. So the range of the drops are anywhere from $20 down to $40. Now this is a pretty wide range. Oh my goodness, sorry guys. Okay. This is a pretty wide range. So what we want to do is we want to pick a number in between those two numbers to get our average drop. And in a second, I'm going to explain what this average drop means. So average drop. Let's see, from 20 to 40, I feel like a good time to buy Microsoft. I'm going to say $20 to $25. is where I would buy Microsoft. Say for instance, I'm looking at this all-time high right here, and I really want to buy Microsoft, but I noticed that it's at an all-time high. So what I'm gonna do is I'm gonna just wait until Microsoft drops anywhere from $20 to $25 down. So I'm gonna go, okay, I'm gonna continue to wait, and then it looks like, let's see, because right there it was at 344. Yeah, so it looks like somewhere around 323 is where I would essentially buy. That would fall into this $20 to $25 drop, which means that after that, from 323 to 313, which is what it's currently at, I would only be losing about $10 if I were to buy right here. What you want to do is basically come up with the drop that you want to buy at, based off the past patterns. So we see here that the past patterns, the drops range anywhere from 18, 23, and 37. That's how we came up with this range, because 18, I'm basically just rounding it to 20. 23 is still basically 20. 37, rounding it to 40. So $20 to $40 of a range, and the average drop from that range, I just came up with this number that I personally feel comfortable with, and that's how I got my average drop. Now, what I like to use on top of all of this is the RSI. Anytime the RSI is closer to 30, it means it's a better buy. It is not at an all-time high. It is where you want to buy because it is most likely at a drop. Right now, RSI is at 36. So it is very close to 30. And as we can see, based off our chart, it is definitely a good time to buy. When the RSI is closer to 70, it means it is at an all-time high. It is not at a good time to buy. So over here, where we had this all-time high, let's look at the RSI for that. It is actually at 72 or like 75, basically at 70. That is why you don't want to buy there, because as you can see here, after that all-time high, we saw this huge drop. So if you were to buy here when the RSI was at 70, you would have lost like $40 just from there, from that little mistake of not knowing where to buy. So this is why we do this. This is why we look at the chart and we study the chart patterns of the past to come up with our average drop and look at the RSI so we can plan out, okay, this is where we're gonna buy and this is how long we will wait for. The fifth step, which is honestly, or the fifth test, which is honestly my favorite test, is to do fundamental analysis. This is where you can have fun and watch YouTube videos, go shopping, visit their investor relations page, which we will go over in a bit what that is. You can read through the news articles and all of that. This is where you get to know the company, kind of like you're taking the company on a date or something. I don't know. This is where you get to ask the company certain questions or learn more information. What makes this company unique than other ones? Like, for example, what makes Costco unique to other retail stores like Walmart, or grocery stores like Walmart or Target, or I don't know what other ones, or Sam's Club, or I don't know. What makes Costco unique? Speaking of Costco, that is one I had a lot of fun researching for my fundamental analysis. So I watched a couple YouTube videos on Costco, just like certain tricks that they do. The fact that Costco is a warehouse, it is not like your average store. Like, for example, Target, that's a store. So already there, the company is not spending money on separately investing in a warehouse where they store all their stuff and then into a store where all customers go. They just merge them. So now all customers go to the warehouse and all shipments, all deliveries or whatever are being also processed in that same warehouse that the customers are visiting. So that's an expense that they've been able to reduce in that way. Another thing is memberships. Sense of status, I guess. It's also like, it comes with a lot of perks. They get to have more discounted things like the gas, just more things that are specifically catering the customers. It just doesn't make you feel like you're at an average grocery store. It's actually more than that, you know? But yeah, all of that I was able to learn from that YouTube video. So if you can just look up on YouTube all about Costco, all about Target, all about Ulta, or all about whatever it is, here are some YouTube channels that I would go to just for like fundamental analysis. And it deadass doesn't have to be a channel that's related to stocks. It can just be a channel educating people on this company. The other thing that's super important is visiting their investors relations page. Investor relations is a page that every single company that goes public has to have. It basically is just a place where investors can go visit and get information on how the company is doing, reporting how they did on earnings, how much they're making. You can find information on the dividends they paid, stock splits. There's basically news articles. There's more information about their mission, upcoming projects they're working on, just anything that the company wants investors to know. You can find it in this investor relations page. It's just a great way to get to know the company and see like how they want to present themselves to you as an investor. You can actually go visit the Costco investor relations page right now, because I think that'll be fun. I've never gone to the Costco investor relations page, so yeah, let's go do that right now. All right, guys, let's do this. Never seen it. I am literally searching it up right now with you guys. Going in raw. Let's go. Wow, it's freaking ass, bro. Look at that. It literally looks like a little kid did it. It looks so outdated. But here you go. This is the Costco investor relations page. Here we have the news, getting straight to the point, stock information, upcoming events. See, you can see all of this. I guess the next earnings report will be on March 3rd. And annual January sales results gonna be on my birthday. Oh, February 2nd. Oh shit. Yeah, so pretty cool. And then let's see. See, there's all the things that you can see. That's mandatory. SEC filings are mandatory. Let's see fundamentals. So this is what I was talking about. Like, you can see how much they're making. The dividends, here you can see what I was telling you, also how much dividends they're paying. Growth ratios, but I don't really know. Oh, this is pretty important. Price to revenue, it's also pretty important. So yeah, it's so cool. Like, you can see the whole thing about the company. Let's see what else. Balance sheet. Let's see that. Damn. I don't really hate it. It gets straight to the point. Trading statistics. This is where you see, like, yeah, it's in the name, stats about the actual stock. On the year, for example, 38% return. 26 week, 22%. Market cap, nice. And then, oh shoot. But yeah, it looks like the highest it's been this entire year is 571, and it's currently at 502. So at a really good drop. Definitely buy into Costco if you can. Oh, this is also a pretty cool page that some investor relations pages have. Frequently asked questions, you see. Wow, this is amazing. You guys can definitely go through this on your own time. I highly recommend. But yeah, let's see. What else? Oh, contact info. Okay. Never even seen this in other investor relations pages. Let's see. News releases. We can see that. Nice. Let's see. Sales news. Oh, they even like filter it out. That's pretty cool. Financial reports is super important just to check like for earnings. Stock information. Basically what we're doing with the statistics. Stock chart. Pretty cool. Oh, and this is like one of my favorite things that a lot of investor relations pages have. It's the investment calculator. You guys can definitely wait before we get into it though. Let's look at the splits. Oh wow. The last time they had a split looks like it was in the 2000s. Wait. Yeah, dang. That's pretty cool. Wow. It was a 2-for-1. But anyways, so investment calculator. Let's go back to that. So let's say you started investing. Okay, we'll just leave it at that. January 2nd at 2014. Let's say we started investing in Costco on that day. Actually, let's change the year. Let's change it to like 2020. We'll do 2017. Let's do that. Let's say we invested $1,000, and let's see how much we would get. Submit. Why is it taking forever? Oh wow. So it would be 6.67 shares, and it would grow your $1,000 to $3,000 in just, how many years would that be? 18, 19, 20, 21. Like 5 years, which is not bad. We got a 235% return. But yeah, it's pretty nice. My other favorite investor relations page is NVIDIA. So as you guys can see here, so cool, like such a huge difference than Costco's. But I wanted to show you guys the investor calculator on here. Let's see, where is it? Ugh, stock info maybe. Yes. Let's do, what was it, January 2nd. So it's gonna be January 2nd. Oh my gosh. Whatever, I'll just search it up like this. Why isn't it letting me? 2017. Did it work? And let's say we started with $1,000, just like Costco. And look at that. Wow. Wow. So it looks like we got 956% total return. And then our ending investment in those 5 years, $1,000 to $10,000. That's insane. Damn, NVIDIA's fire, bro. I love NVIDIA. Or NVIDIA. Whatever the frick you want to call it. I call it NVIDIA. But I love it. Seeing you guys can see more news about it. Just go to investor relations, bro. You got everything on here. Visit a bunch of websites where you can find news articles on this company. Like you can go to Market Watch or Yahoo Finance. Those are honestly the two I heavily rely on. You can just search up the ticker and it should automatically show you a bunch of news articles on that company. But yeah, from here you get, to come up with a better understanding, a better opinion on the company. It's not only an investor, as a consumer, as a customer, whatever you want to name it. And then that way, you're not just holding for the money. You're holding because you strongly believe in this company. And that is the best strategy to use as an investor. Really being proud of what you are investing in and being able to give a whole ass presentation on the company if you really had to. If you're investing in companies that you cannot give a presentation about, you're going to lose money because you're either gonna, one, panic sell whenever there's a very red day in the S&P 500, or two, you're gonna buy it at the wrong time because you're not even familiar with the graph or the kind of drops it goes through. But yeah, that's pretty much it for today's video. If you guys have any questions, feel free to DM me on Instagram or comment down below. I'm always reading comments, always replying to my DMs. But yeah, thank you guys so much for tuning in. I'll see you guys in the next video. Bye. Have a blessed day.